Good morning, everyone, and welcome to the Trade Talk podcast. The biggest news over the weekend was China's announcement of fiscal stimulus for the economy, which fell short of expectations. China offered a 10 trillion yuan lifeline to debt ridden local governments but stopped short of implementing new stimulus, keeping space to respond to a potential trade war when Donald Trump takes office next year. This has actually spoiled the sentiment, and we can see that Asian markets are trading lower. Hang Seng is down, China is down, and even GIFT Nifty is down nearly 90 points. While looking at the US markets and other developed markets, they did well on Friday. However, the dollar index is again back to the levels of 105 and 10-year bond yield is around 4.30. So global macros are still unfavorable, and Asian markets are not in a position to recover from lows. Broadly, we are of the view that our markets were actually waiting for the announcement to come from China, which has actually not surprised anyone, and maybe that's the reason we are expecting limited downside for our markets. But at the same time, the overall weakness in the world markets and world equities is like something which we need to be keep in mind, and we have to follow the levels. Below 23,800 we can expect weakness up to 23,500 or maybe 23,000 in next maybe few days or weeks. So breaking 23,800 and closing below the same will be negative for the market. On the higher side, 24,500, 24,400 going to act as major resistance. Broadly, we are of the view that if there is a medium to long term view, then close to 23,900, 23,800, we should look for adding some select bets with a medium to long term view. And if there is any further more fall, then the next level between 23,000, 23,500, we should look for adding further more positions with a long term view. But at these levels, it is advisable to buy some select stocks with a long term view, and if there is any proper bullish reversal formation, then even traders may look for taking some long positions with the final stop loss at 23,800. Bank Nifty was also in the range. 51,500 is the important level to watch out for, and 50,900. Below 50,900 we can expect gradual weakness toward 50,500 or maybe 50,000. Bank Nifty as well as IT index both are showing some signs of recovery from lower levels, so these two indices should be on the watch list. Commodities may come under pressure as Asian markets are trading lower along with China, and for other important indices like auto, energy, there also we are seeing weakness. So unless and until there is any specific reversal formation, we should look for taking some select bets in this market instead of focusing more on sectors. That's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening me, and have a great day to all of you.